Welcome back guys to another Zero DTE video, and today Coach Ernie is going to be talking about gamma hedging, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description to find Coach Ernie's Skool Community. Enjoy guys.
So, Coach, you just took a long call as a hedge against the put fly that you had on?
Yeah, because I was looking at the momentum. It broke through into a volume well, started to move up quickly. I actually took it just before it broke out because it started to break out, and I said, okay, now it's breaking out. I took it and limited my upside loss.
How much did you?
And so, yeah, that's exactly what it did. It was like, it's what you would call a gamma hedge. A gamma hedge is where you take the real-time P&L that might have high gamma, and that means it has a steep curve, and then flatten it out, which I've talked about before. So this is the effect of the gamma hedge, to flatten it out, where without it, it looks like this. So what I wanted to do was flatten this out like that. And so by adding that, that's exactly what I did. Now, of course, it has effect on that. It limits your total potential profit if it goes back down to the fly, but I don't know that I'm expecting it to go down there. And even if it did, it would take quite a while for that to happen. It limits my loss. It basically flatlines or creates a defined risk instead of an actual stop. So while I'm giving up a little less loss, I'm giving up a little less absolute loss by taking on a little bit more relative or defined risk for the potential of it coming back, either by dropping or continuing its move. Does that make sense to you?
Yes, sir.
Can you just real quick say how you put that gamma, what you did? You took a long fly in what again?
I just added a long call, another long call. It was pretty simple. Just added a long call.
And did you have a criteria about your pricing? Because it looks like you caught it in the middle. Yeah,
I'm trying, whatever the pricing was, I was trying to figure out what can I accept for an ultimate loss. The ultimate loss realistically isn't going to be way out here to the left, because I'd be way out of this trade way before that ever happened. Although it's possible that the market could just turn around and go, whew, would that be a problem in my account? I wouldn't like it, but it still wouldn't be a problem. Is it likely? Extremely unlikely. Would I be able to catch it beforehand? Chances are way better than not that I would be able to catch it well beforehand, and probably with a small profit. I'm weighing all those conditions. What's the ultimate loss? What's the likely loss? What are the chances of potentially coming out of this smelling better?
Running up like this, you're going to be
Well,
fine.
was that your big ass fly? Is that what you hedged? You had the big ass fly, you just held on to it?
Yeah. So here's my big ass fly, right? A stop would have been right around here, right around there. With my normal stop would have been right about there when it got to about here during the day. But what I decided was to take a slightly bigger stop and just put on two more long calls, because this is two positions. It's not just a single position. You can see my quantity is two. I just added two long calls, and I just wanted to pay a price that would give me the type of risk that I was willing to take. I put on one with a strike price of 60.55, and I paid $17 for it. And so that resulted in this, all right? Limited my loss there. If it keeps on going up the way it is, there's a potential I could make money. And to me right now at 11:30 in the morning, it looks like that potential is pretty good.
Thanks for watching guys, I hope you enjoyed the video, and if you did, make sure you hit the subscribe button and the like button below. If you're interested in becoming a pro trader, remember to check out the link in the description for Ernie's Skool Community.